Okay, let's get right into it. Right now, in early 2026, we are seeing two of the world's most important economies make some absolutely massive moves. Moves that could really redefine the flow of global investment. We're talking about Saudi Arabia and the UAE, and they are unlocking their markets in ways we've just never seen before. People are calling it the Gulf's Great Opening, and in this explainer, we are going to break down exactly what this new landscape means for you. And this isn't some far-off future thing. It is happening right now. Just look at this timeline. In January, Saudi Arabia, for the very first time, opened its property market to foreign individuals. Just days later, on the 27th, the UAE rolled out these major new investment vehicles focusing on luxury and tech. And then, the big one. February 1st, the Saudi stock market, that's a dowel, swings its doors wide open to literally every foreign investor. The opportunity is here. And the timing? Well, it's everything. So, here's how we're going to break it all down. First, we'll look at Saudi Arabia's new frontier, covering those huge property and stock market changes. Then we're getting super practical with a Tadawul investor checklist. After that, we'll pivot over to the UAE's high-tech vision. And finally, we'll bring it all together with a strategy we're calling the two-speed portfolio. All right, first up, Saudi Arabia. What's happening in the kingdom is nothing short of a revolution for investors. We're about to unpack the incredible changes to both its property and stock markets that are rolling out as we speak. I mean, the change here is just wow. Before this year, if you were a foreign individual, you simply couldn't own property in Saudi Arabia, period. It was a market for big corporations, that's it. But now, that wall has completely come down. Individuals, whether you're a resident or not, can now buy property outright in key economic zones like Riyadh, Jeddah, and Dammam. These are the areas being specifically developed for foreign investment and growth. And this isn't just one narrow little path to ownership either. The new rules give you four really distinct ways to get in. You've got your traditional ownership, buying residential or commercial land. You can also take a direct stake in those mind-blowing mega projects like NEOM. Or you could target commercial land in special economic zones where the government is pouring in money. And in a really cool modern twist, you can even get involved through digital fractional ownership, buying tokenized shares from anywhere in the world. At the same time, the change in the stock market is just as massive. Until February 1st, getting into the Saudi exchange, the Tadawul, was reserved for what they called qualified foreign investors, or QFIs. Basically, you needed to be a huge institution with over $1 billion in assets, and you had to go through this long approval process. And now, the whole QFI system is gone, abolished. The market is now open to everyone. And you really need to pay attention to this quote from the chairman of the Capital Market Authority. This is so important. He's telling us that opening up direct access is just step one. The next big thing on the horizon is a review of the foreign ownership limits on individual companies. This is a huge signal that even more opening up, even more liberalization could be coming down the pike.
So, the doors are open, let's get practical. If you're actually thinking about trading on the Saudi exchange for the first time on February 1st, what do you really need to know? Well, we put together a 10-point checklist to get you started.
Okay, let's run through this. The most important thing, the old barriers are gone. You don't need $1 billion anymore. Getting started is basically like opening a standard brokerage account with a local member firm. Now, when you're looking at what to invest in, think beyond just oil. We're talking IT, renewables, healthcare. These are major growth sectors. Of course, you'll see the big players like Aramco, but there are also things called sukuk, which are just Sharia-compliant investment certificates. Also keep an eye on what's called foreign ownership limits, or FOLs. Those are the caps on how much of a single company foreigners can own. And as we just heard, they're next up for review. Finally, a lot of analysts are saying valuations look pretty attractive right now after a recent dip. So in emerging markets like this, sometimes getting in early is the best way to learn. Okay, let's shift gears and talk about the UAE. Now, while Saudi Arabia's big move feels like a sudden, wide-open door, the UAE's strategy is different. It's more of a calculated, strategic acceleration of a plan that's been in motion for a while. It's all being driven by something called Vision 2031, a plan to build a high-tech, high-value economy that's built to last. So what is Vision 2031? Well, think of it as the UAE's national game plan for the next decade. The core idea here is to build on its current success and really cement its place as a global economic hub, one that's not just attractive and influential, but also a key partner on the world stage. It's really all about building an economy that's ready for the future. And the ambitions here are very, very real. They're not just talking points. The goal is to literally double the national GDP. They're aiming to be in the top 10 countries in the world for attracting global talent and for quality of life. You see, these aren't just vague ideas. They are hard, measurable targets that are driving every single policy decision. Now, to really understand the UAE's strategy, you have to get your head around this concept they call the conductivity loop. It all starts with one super clear goal: become a world-leading hub for the digital economy. And the first step to get there? Massive, and I mean massive, investment in the foundational building blocks. We're talking AI and the absolute best digital infrastructure money can buy. So you make all this investment in incredible infrastructure. Then what happens? Well, that's the effectomore. World-class digital infrastructure acts like a giant magnet. It starts pulling in the best global talent and the most sophisticated capital from all over the world. This influx creates this vibrant, high-net-worth ecosystem, which naturally starts boosting demand across the entire economy, especially for high-end luxury goods and tech services. And here is the genius of it. This is where the loop closes and becomes a self-powering cycle. The result of all that new demand is that the luxury and tech sectors boom. So what do the UAE sovereign wealth funds do? They invest in those booming global sectors, generate huge returns, and then funnel that money right back into the initial goal, making the AI and digital infrastructure even better. Better infrastructure attracts more talent, which creates more wealth, which generates more returns. You see how it works? It just keeps feeding itself. So what we have here are two very different, very powerful strategies playing out right next to each other. For an investor, the playbook really becomes a tale of two approaches. The big question is, how do you balance the explosive growth potential from Saudi Arabia with the carefully engineered stability of the UAE? This table really lays out that core difference beautifully. Take a look at rental yields. Both are really strong, but you see, Saudi Arabia is just a little bit higher, which reflects that sort of early-stage growth opportunity. GDP forecasts are looking great for both, but look at the government finances. Saudi Arabia is running a deficit, and its debt to GDP is rising because it's spending so much money on this transformation. The UAE, on the other hand, is running a surplus, and its debt is actually falling. It's the classic growth versus stability trade-off laid out in black and white. Of course, for anyone looking at real estate, this is probably the most practical question there is. What does it actually cost me to get in the door? What are the upfront taxes and fees I should be bracing for? Okay, so based on the new laws, the picture is clearest in Saudi Arabia. If you're a foreign buyer in one of those designated zones, you can expect a combined levy of about 10% that covers all the fees and taxes on the purchase. Now for Dubai, it's a bit trickier. While we know fees and taxes exist, the source materials for this explainer just don't provide a single, all-in comparable figure for 2026. So making a direct apples-to-apples comparison on that specific point is tough. So look, here's the bottom line. For the first time, the doors to two of the world's most dynamic economies are officially wide open to pretty much everyone. Investors now have a real choice. So the question is no longer if you can get access to these markets, the question is how. How are you going to balance the raw, explosive growth of Saudi Arabia's great opening with the engineered long-term stability of the UAE's high-tech vision in your own portfolio? That's the strategic decision that's on the table right now.